Hello and welcome back to the Rect Capital channel. This is Rect Capital and welcome to today's update on Bitcoin, Ethereum, Litecoin. We're going to be looking at Ethereum and Litecoin on the USD and BTC pairings, but we're going to briefly look at these because I went into a lot more detail in yesterday's video. So I'm just going to link yesterday's video in the description below. You can check out for all of my different predictions and my analysis towards Bitcoin, Ethereum, and Litecoin. But we're going to briefly touch upon how these predictions have evolved over time, over the time of the past 24 hours. But we're also going to dive deep into a chart that I shared yesterday about the pre-halving retraces that we see prior to Bitcoin's halving. So I'm going to talk about these retraces that we've seen in the past and what this could potentially mean for this current correction in Bitcoin's price. So we're going to dive into all of that. But before we do, I'd like to talk about the Rect Capital Risk Management course. Today I've uploaded a new episode, The Impact of Emotions on Probability, and I'm extremely excited because this is a subject that I find very interesting. The impact of emotions on probability is the cornerstone of our plight as human beings, because essentially we have two brains in a sense. We have the emotional part of the brain and we have the logical part of the brain, and there's a constant collision between these two parts of the brain, and these emotions influence our logical part of the brain in many different ways, and it's this collision that we constantly see in our brain that affects our trading, it affects our emotionality, and it affects our probability calculator. And this is something that I touch upon in the latest episode, which I've uploaded today. Very excited about that. But in general, the Rect Capital Risk Management course is a very good resource for you to just learn about risk management, because many people, many investors and traders, they trade and invest emotionally and they have no semblance of risk management, which is exactly why I've decided to design a course for beginners and intermediate traders so that they can understand how to think about their risk. So in this course, you'll find a lot of technicalities like the break-even win rate, the risk to reward ratio, and just thinking about your risk in ways that you can put parameters around them so that it's not just an uncertain thing. Oh, what's my risk? What could I potentially lose? Just put in parameters on there so that you can look at risk logically, because otherwise people look at risk very emotionally. So there is a lot of technical stuff in there, but there is a lot of psychological stuff in there, and that's something that I really gravitate towards, and that's something that's going to help you etch an edge in the market, because it's the psychological, intangible qualities that really help you in your trading and in your investing, but above all else in your risk management approach. So here's what you'll learn in the risk management course. How to time your exposure to altcoins. That is a major thing. You have to understand the Bitcoin correlation and the Bitcoin and altcoin correlation. And you have to study Bitcoin at all times whenever you're trading altcoins. So how to predict when to sell altcoins on time before Bitcoin moves. And it's all about this correlation. And sometimes the targets for your altcoins can be found in Bitcoin's price. And if you're seeing that Bitcoin's being a little bit overextended, then there you go. That's where you can start to shed your altcoin exposure. And I talk about how to de-risk from altcoins to protect your capital. And this ties in what I've just said about looking at Bitcoin at all times, how to develop your very own risk management strategy. I share a lot of my own personal risk management strategy. Actually, I'm very transparent there. I share many different trades, and I share my past trades where I talk about how I managed this trade, when I added to winners, when I start to shed off potential losers. And of course, we talk about which types of trades best suit your personal trading style and risk tolerance and profile. And this is something that you can deduce by looking at a few key technical things that I go into a bit more detail in the course, because it's not something that you decide, okay, my risk profile is going to be this and this and this. You decide a risk profile and risk tolerance from the past trades that you've made, and it's this kind of historical journaling that you have to have and keep so that you can be informed, better informed about what really suits you. Because a lot of the time we'd want to have higher risk, but in actuality, your data, your journal doesn't lie. It will always tell you the truth. And it's based on this journal where you have to think, okay, well, actually, this is the RR of the trade that I prefer. I don't really add to winners. Maybe that's what I should start doing. But of course, I do prefer these sort of position sizes, etc., etc. So overall, this is the overview of the video tutorials, introduction to risk management, portfolio structuring and diversification, the psychology of risk management, so that's the more psychological part, and of course the Bitcoin altcoin correlation. So I personally feel that this is absolutely great value for money. It's only $97, and if you think about it from an investing standpoint, you're investing in yourself, and that's the best investment you can make. It's the best investment you can make in your own skill set and in your own education, because that's where the highest return on investment lies. And after all, if $97 is just that one initial investment, think of all those losses that you can actually curb and not even have to experience, because you're going to actually save a lot more money, a lot more time, and a lot of attention seeking out resources, or even just trying to learn by yourself. I don't want you to go through all that steep learning curve when it comes to learning risk management by yourself. I don't want you to go through years of learning that by yourself. I want to cut your learning curve in half. I want to guide you, and I want to be available for your questions if and when you have them, and I'm sure you're going to have them. All of my students are in contact with me, and of course, if you want to get in touch with me on Twitter or Telegram just to learn a bit more about this course, and if you have any questions in general, I'm always open, whether that's on YouTube, whether that's on Twitter, Telegram. Get in touch directly, and I'll be more than happy to help you, whether that's with risk management or any general questions, or even post your comments down below on YouTube. I read and respond to each and every comment I get here, and I really appreciate the engagement from you guys. So if you are interested in the course, I'm going to link the link in the description down below, so check it out. And without further ado, let's dive into today's update. So I don't want to spend too much time on Bitcoin, Ethereum, and Litecoin today, because I did go into a lot more detail in yesterday's video, so that's also going to be linked in the description below. Check it out if you haven't. But I do want to talk about the updates in terms of its price, what has happened since yesterday, and how are things standing at the moment. But of course, on a macro sense, not much has changed, but on a micro sense, on a lower time frame sense, there have been some changes, and these changes have been quite in line with the predictions made yesterday. So of course, check out the video yesterday if you haven't seen it, but let's look at what's going on now. So this is Bitcoin's yesterday chart, and we spoke about the bear flag, how these higher lows had to maintain themselves to just keep that bullish developing tendency. But of course, since then, we saw a breakdown into the green region, and I spoke about how this green region was very important to hold before we saw this monthly low, this macro monthly range low. So we did see some market reaction from this green area, and that's good because that's 2.5% to the upside. But at the moment, what I'm looking for here is this going to be bearish confirmation? So bearish confirmation comes in two ways, in two forms. First, we get the breakdown, and oftentimes we get that candle close, that higher time frame candle close, and of course we did get that. But bearish confirmation, of course, happens in two ways: the breakdown and followed by a potential retest of previous support as resistance. So if we see a candle close below this black uptrending previous support, potentially new resistance, then we're probably going to see a rejection from there, and we're going to see a return to the green region. So above all else, I just want this green region to continue to hold. If it doesn't, we'll probably see these levels over here. But at the moment, I don't want to get too ahead of myself. I just want to see how this bear flag bottom is going to figure as a resistance for price in the short term. So that's my view on Bitcoin for the time being. About Ethereum, we also spoke about how this higher low would be a point of contact for Ethereum. Would it roll over? Would it not? Well, from yesterday, this is the chart from yesterday, and today we're seeing that there is some market reaction here. and at the moment all is well and good, but it still needs to keep on closing on the 4 hour or at least any higher time frame. We need to see these candle closes above this higher low, because otherwise we're going to see a drop to the macro channel low for Ethereum on the weekly time frame. So this is the weekly macro channel, the low, and the high is 360. It's not on this chart, but I do go into more detail in yesterday's video. So not much has changed here. If this high low breaches, then this is what we'll probably have to look for, but until then, let's see how things evolve. This is also yesterday's chart about the lower highs. We spoke about this being a demand zone for Ethereum, so I'm just going to extend this. You can see that there is some support here, and today indeed we are still seeing this support, but after all, if this demand zone fails, we have a volume gap, so we're probably going to see price dwindle to around this region. So I did go into more detail about that yesterday, so I'm not going to spend too much time on this today. But moving on, Litecoin, this is the chart from yesterday. This is the support that was in question, but we are seeing weaker and weaker support bounces, and of course we did say that we'd probably see Litecoin roll over, and today we are seeing this exactly happen. And bear in mind what we're seeing with Bitcoin and Litecoin as well. They are closely mirroring each other, and are they both going to see bearish confirmation? So we did see the candle close below support for Litecoin, as well as for the bear flag for Bitcoin, remember, and we're also seeing this second candle to potentially flip this into a resistance. Now if this happens, then Litecoin will probably reach these regions, because after all this is where the demand is. But I did speak a bit more about that yesterday in yesterday's video. I know I keep on talking about yesterday's video, but there is a confluence and there is a logic. I mean, in my videos I do talk about things as they are every day, and though we see some changes from time to time every day, you know, on a micro scale, the macro view persists and remains, and of course my videos still are very much valid, because not much is changing, only these small little swings in price action. So this was yesterday's chart for LTC BTC. We spoke about the bearish confirmation here, so it looks like the BTC pairing for Litecoin foreshadowed something in the USD chart, so potentially that's something to think about. That would be quite interesting, but we saw a bearish confirmation on this higher low resistance. This higher low was a support, but now it's a resistance, and we saw that confirmation and we saw that rejection as well for LTC BTC. So that's the update today. That's what we've seen change since yesterday. A few changes indeed, but still in the process. Are we going to see those bearish confirmations? And that's something I'm going to be looking at on the majors as well as on Bitcoin. But let's dive into the retraces that we've seen prior to every halving in the past, and what this could potentially mean for the price action of Bitcoin going forward. So of course this is tying in with my Bitcoin halving article, which has recently caught fire. It's exploded once again. Loads of people are checking it out, and I'm really pleased to see that. Of course this does tie in with that, so if you haven't read it, check it out. It's in the description down below as well. But I have added a few things, and I'm just going to explain what, so that we all tie this in together nicely. So this is the first retrace in the new bull market for this cycle right over here. That's minus 45%. We see the same relationship right over here, but this time it was a minus 40.5% retrace. And we have to zoom in here to really appreciate this retrace, because it was quite volatile. We saw this outlier wick to the upside, and then we saw a massive sharp retrace in the week afterwards. So that was a lot of volatility during that very brief time period. Remember, this is the weekly time frame on the logarithmic scale for Bitcoin's price. So of course 40.5% within 2 weeks really. So that must have been a very emotional time for holders at the time. But of course this is the retrace, and ever since, once we saw that bottom over here, we saw higher lows and price meandered, and it didn't really make new highs for many weeks, many months in fact. But of course it did get a spike prior to the halving, immediately prior to the halving. But what I want to talk about is the minus 44% retrace that we're seeing at the moment. And Bitcoin is no stranger to these retraces. We're seeing this time and time again, and I understand that many people are going to tell me sample size matters. And it does matter. We only have 2 halvings in the books. Halving 3 hasn't even happened yet, so sample size does matter. This is a limited sample size when it comes to these kinds of analyses, but sample size is going to be a problem for many decades to come. Halvings happen every 4 years, so for many, many more decades, we're still going to have few halvings to base our analysis on. So this is what we have to work with at the moment, and what history is telling us, what these market cycles are telling us, is that Bitcoin tends to retrace quite a bit before it's halving, but not just a year before it's halving. So if we actually think about this, this peak over here was a year before the halving, roughly speaking, 2 months removed, roughly speaking. Over here, we also saw this peak around a year before the halving, and the same thing happened here. So we saw the peak around here. That was, roughly speaking, a year before the halving as well. So we are seeing a recurring tendency. It's these recurring themes that are very fascinating, and they are underpinned by psychology pretty much. That's essentially the whole theory behind market cycles. These market cycles happen because psychology happens. You see these recurring moves in the market, and it's the recurring psychological emotions that also happen as well. Very fascinating stuff. So these are the retraces that we've been speaking about: 45%, 40.5%, and 44%. But what I wanted to talk about is the retraces that we see immediately prior to the halving as well. And this is something I've touched upon already in my article, so you're probably going to be familiar with this if you've read the article already. So let's dive into the charts, and I'm going to talk about the pre-halving retraces that I mentioned in the article just immediately prior to the halving itself. So we're seeing a retrace just immediately prior to the halving over here. We're seeing that this retrace happens over here, and then it recovers going into the halving, but it kind of dips as well. So basically speaking, investors are selling the hype prior to the halving, and that's not how the halving really works, because it's a fundamental change in Bitcoin itself, and it's not something that you have to buy the hype and sell the news on. So of course people are expecting price appreciation for the halving, for Bitcoin's price as a result of the halving, so that's why they buy into it, and we see a new bull trend before the halving, a few months before the halving. So of course people are going to sell that price appreciation. Those investors are going to cash in, but they are going to miss out on the exponentiality that happens afterwards. And of course, that's something that we want to avoid. But overall, if we look at all these pre-halving retraces, then we can expect that we'll see a pre-halving retrace, not only now, of course, but we're also going to see one around this time. Right, we're going to see one immediately prior to the halving, or even slightly afterwards into the halving. So we're seeing over here, we're seeing price retrace, but of course it recovers afterwards, and we're seeing price dip before the halving. So there are some changes. Before halving 1, we saw the retrace that was done and dusted, but over here in halving 2, we saw the retrace actually carry over into and past the halving. But in both cases, we've seen exponential rallies to the upside afterwards. So I am expecting more of the same. I do want to look at the trend lines over here. So I am going to plot a angled trend line, and I'm just going to bring that above the peak of that move. I'm going to disregard the wicks at the moment. That's a 9% degree angle. And over here, we're going to do the same. So that's going to be from peak to peak, roughly speaking, 3%. Let me just maybe try and make that a little bit. So that's 2% degrees. And from peak to peak, once again. So it would be for this halving, pre-halving retrace right over here, roughly speaking. So we are seeing a small recurrence. I wouldn't place too much emphasis here, but it is 2 degrees in each case. So essentially, just to recap, what I've done here is I've applied a angled trend line from the peak of the previous move, the previous bull cycle, and the top of the pre-halving retrace before it actually experienced that retrace. So we are seeing the peak of the bull cycle over here, and then the bear market, and then we're seeing that pre-halving retrace. And these pre-halving retraces in blue, they tend to happen up to 100 days prior to the halving. So of course we are seeing these massive retraces at the moment, which happen, or at least we see the peak. The peak of these retraces happen a year before the halving, whereas these retraces happen a few weeks, a few months prior to the halving. So that's the key difference. And of course we see here 2 degrees angled, and we're going to see around here, we'd probably see the peak of the next move. And of course this kind of ties in with 16,000 roughly speaking. So it is quite interesting that we see this 2-degree angle recurring potentially, because of course we haven't seen price happen yet moving in towards the halving. But what this potentially could tie in with is this. We could see 16k roughly speaking, or 15.5k in the new year, but still prior to the halving. So at the moment this first point is coming true. We're not seeing a new high in 2019 for Bitcoin at the moment. We are actually below 8k at the moment. So definitely point A is becoming true, but still there is some time left this year. But of course this tweet overall, it was based on these historical tendencies that I deduced from my halving article. So of course this is essentially how I calculated it, based on previous halving cycles and price action and market cycles. But point B is basically how I calculated 16k based on what we see prior to the halving, immediately prior to the halving. So we don't see a new all-time high in the year before the halving, but we tend to see a new all-time high in the new year, but still prior to the halving, pre-halving. And of course when I mean new all-time high, I mean new high for the cycle, of course. So 16k next year would be higher than the new yearly high for this year, which is 13.9k. So of course it is about breaching that previous high, and this breach tends to happen in the new year prior to the halving. So I find it interesting that we have that 2-degree angle there, and there is some confluence there, and this is a confluence that I always find interesting. But of course we have to bear in mind that there will probably be or there could be up to 100 days pre-halving. We could see a 38-50% retrace. I go into a lot more detail in the halving article about this. And of course, like we saw, we will see a new all-time high post-halving. We'll probably see exponential gains in Bitcoin's price action. And it's very, very important that overall investors don't get trapped in these sort of short-term gains, which they can still be pretty good leading into the halving. But it's a bear trap. It's a bear trap. That immediate retrace prior to the halving is a bear trap for investors, and they just get shaken out of their positions. They sell the hype, so to speak, and they exit the market and miss out on those exponential gains that happen. So it's just very important to bear that in mind, that the most gains happen after the halving. At least this is what history says, and if history repeats itself, then it's going to be a very interesting 2020 after the third halving. So having said all of this, and tying in with what we've been speaking about, the halving and this latest correction and these previous market cycles, tying all of this in together, gelling it all together, I personally feel this Bitcoin retrace is going to be much different compared to the 2018 bear market retraces, because in the bear market we saw Bitcoin experience a macro downtrend with relief rallies every now and then on the way to new yearly lows. But this isn't the price context for Bitcoin at the moment, at least in my opinion. In this bull market, Bitcoin is in an overall uptrend with small pullbacks on the way to new highs, and of course it's not quite a small one, it's 40%, but of course it is a healthy retrace in an otherwise healthy growth cycle. And we've seen these major corrections being the first corrections in a new bull cycle, and we've seen this in prior to halving 1, and we've seen it prior to halving 2, and I feel that we're seeing it prior to halving 3 as well. And this ties in nicely with this tweet that this Bitcoin correction is a second chance for a lot of people. And I know that whenever price is above 10,000 or even 12,000, many people buy then and they FOMO and they say to themselves, if Bitcoin were at 8K, if it were at 7K, I'd totally buy more. If only I had that chance. Well, it's quite interesting that now that this sort of retrace has rolled around, people think a little bit differently. They're being more fearful. They're being, they don't remember that initial intention. Whereas for me as a trader and an investor, it's very important to remember this initial intention and to just bear in mind this entire analysis that we have about the halving and what happens after the halving. Most of the gains happen after the halving. So if we get an opportunity, at least from my point of view, whenever I get an opportunity to accumulate more after a retrace that tends to happen in the past, I'm definitely taking that opportunity, and I am definitely going to be accumulating as we see stronger and stronger dips. So definitely a financial opportunity for me. And after all, it is all about just following through on your promises. If you promise yourself that you'll buy Bitcoin when it goes lower, do yourself a favor and actually follow through on that initial intention. Be faithful to your initial intention, and you might do very well because of it. But having said that, we have to know that whenever a major pullback like this happens, we always want to get a little bit greedy. So greed is quite interesting because whenever price goes up to the upside, we always want to sell at a higher price. That's one form of greed. But there's another form of greed. Whenever we see a retrace in price, we just want price to go a little bit lower. We want to penny pinch. We want price to go 5% lower, 2% lower. But the thing is, the best way to go about such retraces is to just average in. Averaging in works better because it's very tough to buy the bottom, and you should never try and buy the bottom with just one huge buy order. You should always pepper your buy orders in various price levels, and you'll get an average this way. And this is how you're going to gain exposure slowly but surely over time into Bitcoin. And this is the beauty of averaging in, because price could fall down a little bit more and you'll probably even scoop up a little bit of Bitcoin at a much lower price than you thought and initially anticipated. So it's just better to average in and remember not to be penny pinching at a strong retrace. So before we wrap up, I am going to leave you with this. Here are the figures for Bitcoin's growth prior to and after its halving. Pre-halving 1, 600%. Post-halving 1, over 3,400%. Prior to halving 2, over 300%. After halving 2, 4,000%. So most of Bitcoin's growth as a result of the halving occurs after the halving, and there's my link to the Bitcoin halving article. It is linked in the description down below. So if you did like this episode, please give a like, and if you have a few comments about the Bitcoin halving article, about what I've been speaking about in terms of the retraces, please leave a comment down below, and of course subscribe to the channel. If you'd like to see more videos like these, feel free to subscribe to this channel for more videos in the future. Thank you so much for watching. I'm Rect Capital, and I'll speak to you soon.